Hello, I'm David Goodger from Tourism Economics, part of the Oxford Economics Group. Thank you for joining me for this session. For those of you who aren't aware of who Oxford Economics are, we started out around 30 years ago, related to Oxford University, but have since become one of the world's leading independent global forecasting and advisory groups. I'm representing our Tourism Economics division, where we produce regular forecasts and analysis for the travel sector. And I'd like to share some of the recent trends and findings from our forecast with you today. As a quick outline of the key points that I'd like to talk through, just quantify that and confirm, as you may all suspect, that 2020 will see record falls in travel sector and particularly in air traffic due to the coronavirus pandemic. But we have seen some more promising signs in mid-2020 and through the summer months. There's been a clear turning point, some improvement, although still lagging where we would ordinarily like to be. Our baseline forecast suggests that we're not going to see a recovery in terms of return to levels in 2019 till 2023, domestic and other segments returning ahead of the international, particularly the long haul. And of course, there is a lot of uncertainty in this outlook, but still some longer run growth potential. So to step through some of these points in a bit more detail, just to confirm the latest numbers that we're estimating based on year-to-date and our models is that we are seeing record falls in travel in 2020. We're looking at well over 50% fall in international travel worldwide. Not quite as stark, but still very large falls in domestic travel, leading to large drops in all activity and all air transport across every region worldwide. As mentioned, this is confirmed. This is based on some of the year-to-date data, and just to give a quick snapshot of that and to confirm some of these trends, looking at some of the data that's collated by one of our forecast partners, IATA, we can see that both domestic flights and international flights, same as passengers, fell very sharply at the start of this year, notably large falls in March and April when travel restrictions and lockdown measures were imposed. Falls in international volumes, much starker, much closer to being virtually no activity in a lot of markets there. And what we have also seen, though, as we've gone into the summer, though, is that start of the improvement, but really notable on the domestic travel more so than on the international. And this is something we've seen in other data sets, other indicators that we are looking at on a more high frequency basis. For example, sharing here some of the data from STR on the hotel side, another organization that we partner with in terms of hotel analysis. And we can see there, again, the very sharp falls in activity earlier in the year, mainly in March for most countries when measures were imposed earlier, impacts obviously in China with the earlier lockdown measures imposed. And we have then seen, though, the same somewhat encouraging signs as we've gone in through the summer months, the pickup in that activity, but still lagging what we would ordinarily expect. Most positive signs there in China, where it's only lagging what we'd normally expect by around 5 to 10 percentage points, which does show quite how stark the falls have been earlier in the year. 5 to 10% we'd ordinarily be talking about as a terrible year, but this is in the context of 2020, that's recovery. US also seems to have come back, getting back to more normal occupancy rates, levels of activity, but it's a lot of other markets are lagging, including Asia Pacific and Europe. Clear improvements through summer for Europe, but still lagging the experience in markets such as China, US, and as well as clearly lagging where we would ordinarily be. This pace of this recovery, as well as the extent of the initial falls, is very strongly linked to the travel restrictions that have been imposed in all of these different markets. These vary hugely by market, but there are some commonalities that we do see as we've been analysing this. And we have put together what we call our travel restriction stringency index. This is something that we've looked at for all markets, and showing here the index that we have for the world, which shows some common themes that we're seeing across all destinations. That travel restrictions were imposed, very stringent, banning all bar essential travel earlier in the year. There has then been that easing of travel restrictions, but we have seen the easing coming much more quickly on domestic travel, and then following that, sequentially coming on short-haul travel, allowing intra-regional travel before they're moving into longer-haul inter-regional travel. And you can see simply why China and the US have been able to recover that bit quicker is just because of the sheer scale of the domestic market. Once that market is allowed to travel again freely, we are starting to see that more rapid return. Europe, by contrast, is a very large internal market, but it does have international borders within it. Ordinarily, this would operate in a similar way to US and China. A lot of the frictionless travel across European borders in ordinary circumstances, but this year they have been much more barriers. What we have seen in the past couple of months has been some of that more freedom being allowed to come back into the market, much easier cross-border travel, allowing that pickup, but there are still a lot of those restrictions in place, meaning that the recovery has not to date at least been as rapid. And we do expect some of these barriers to remain in place throughout the near term. As we're looking to our forecast, just put up a quick snapshot of our key assumptions. So the initial set of assumptions, as we're looking at the very near term, it does remain highly linked to the pandemic timeline. And fortunately, the virus will remain a defining factor through to early next year. We expect some continued regional outbreaks, potentially second waves on a localized basis. But progress in therapeutics and a vaccine is expected. We do expect a vaccine to become available in early 2021, not fully rolled out, but available and starting to allow some more travel early 2021 to allow further recovery to take place on that basis. Policy response to any of this is also crucial. We do see continued easing of lockdown measures, but some bumpy roads on there. There will be some renewed localized lockdowns and some limits still on international travel, but still favoring the short haul. The other key driver as we're looking at this is what is happening in terms of the global economy. What does that mean for travel preferences, travel confidence as well? We are seeing a very deep recession this year, around 4.5% drop in GDP, but we are also seeing a rapid recovery on that, driven by pent-up demand, historic stimulus, but as noted on here, the path will remain below the pre-crisis level, and now that's quite clear on this chart here. We can see, firstly, the scale of the fall in global GDP in the first half of 2020. There are now some very encouraging signs in the second half of the year. Retail sales, a lot of other consumer activity showing, on the one hand, some very rapid rebounds, offsetting some of those Q2 falls that we saw, but there are still a lot of fragilities out there. We're not seeing full return yet in any of the data, in any of the forward-looking indicators, and we do expect this recovery to only be partial this year and then return to a more gradual growth path. And this is not a return to the pre-coronavirus trend. If we do a comparison to the global financial crisis, the medium-term impacts are comparable. We do expect to see that gradual growth over the medium term. So in 3, 4, 5 years' time, we do expect to see levels of GDP relative to 2019 comparable to global financial crisis over that period. On average, there are obviously a lot of cross-country differences. So bringing this together, what do we then expect for passenger demand? What can we expect over the coming years? Is that, well, firstly, we do expect travel to return. This is a key feature of our forecasts. Travel will come back to prior peak levels. We will see travel surpassing the prior 2019 peak levels. This is something, okay, not on this scale, but we have seen travel recover from very large hits before. There is still, a need and a want for people to still travel, experience other destinations in terms of leisure, still the requirement for people to get together and meet for business travel. But it will not be immediate. Domestic travel, slightly softer falls for 2020 that we've already talked about, but also a more rapid recovery from that. We expect to see 2019 levels regained by around 2022, but then a longer time frame for international air passengers around 2024 before they come back. So what this means then for airlines, for destinations, is that domestic routes and demand, as well as short and medium haul demand, is going to become much more important, taking a much higher share of overall passenger demand. And this is then key factors when we're looking at the recovery path and the timing of recovery for individual destinations, whether that's countries, regions, airports, or airlines. What we can see on this chart here is the scale of the initial fall in 2020 compared with then the growth over the subsequent years to 2023, and the numbers show then the level of passengers expected in 2023 relative to 2019. And we can see a similar pattern across all regions expected, and similarly, we see this across all of the countries that we look at, is that the domestic and short haul volumes will recover by 2023, and it's the long haul that is more of a lag. So simply those markets, those businesses reliant on the domestic and short haul should see that earlier recovery than those with more of a long haul reliance. Now, of course, there is a lot of uncertainty surrounding this outlook. Firstly, in terms of the travel risks, the risks to greater restrictions, a return to lockdown measures being imposed, reimposed, no further easing taking place. And there is potential upside to this, some faster easing that could take place, but overall, we do see the risks skewed to the downside. Similarly, in terms of the economic growth path, yes, there is a potential upside. Adding some of our alternative GDP forecasts on top of the prior chart, you can see this. There is potential for a more rapid upturn, but there is a high probability that there would be a lower outcome. Some of the alternative scenarios really do add that worry on the downside. There is this very lasting risk of it turning into another financial crisis and a very deep U-shaped recession. That is something of a tail risk, but unfortunately we can't rule it out. If there is to be a worse outcome, we do expect it to be more of a short term, something along the lines of either the premature easing or a second wave, with more of an impact on 2021 and then coming back. But it does show that there is clear risks out there to economic demand, depending on how some of the markets react, some of how businesses react, and how governments react if there is the continued stimulus. But we do believe that the policy response to date, it will be supportive enough to allow what we're seeing as the baseline outlook. So then what this implies for air passengers travel, showing on this chart the RPKs in our forecast that we carry out with IATA. So again, we can see there is a clear range of uncertainty around what we're looking at for the outlook for passenger demand and RPKs. Clearly skewed to the downside. We don't expect to get back to the pre-COVID trend or pre-COVID forecast. There is some upside, still lagging that, but clearer, there is also some significant downside risk, whereas in the baseline, we do expect that recovery to 2019 levels by around 2023, 2024. The downside, this could be pushed out to 2025, 2026, or even beyond. Some real risks out there. But still, to end on a slightly more positive note, if we take a much longer view, taking a longer run growth, yes, we do expect there will be some lasting impacts here for a large number of reasons. There will be some lasting economic damage, as well as some impacts on propensity to travel for demographic groups and so on. But overall, that potential for long run growth still remains. We do expect there to be a longer run opportunity to return to much higher volumes of passenger travel, as well as travel in general. And there is that longer run growth opportunity. Even on our downside case, we expect prior levels to be far exceeded once we take a 10, 20 year outlook. So while there is that clear downside in the short run, the longer run growth opportunity remains, and we do expect the travel sector to recover over the longer run. So thank you for your time, and please feel free to get in touch with me if you have any questions relating to any of this.